This is not financial advice. This is just me trying to educate you guys on historic trends I see in the Bitcoin market. So this presentation will be called Bitcoin Bull Run Cycle, presented by me. So we're gonna go through it, and hopefully this has, let's say, a simplistic overview to it. And if you have any problems, just let me know in the chat. So, is this magic? Is the ability to predict this magic? No, it's simply just doing analysis on different graphs and seeing what those analysis looks like. Okay, so this is Bitcoin current history. And if you watch all the way up from $0, and we're talking about 10 cents, all the way up to $75, let's say 61,000, you could see there's a general trend to it. But you could barely see when it was 1,000. You could barely see that 21,000. This graph is almost a very terrible graph to view this information on. So if we go to the next one, we will see this is the same Bitcoin history as before, but this is using a log chart, right? And you could see now, we can see the 100, we could see the 1,000, we could see the 10 and 20,000, and now we could see us approaching the 100K and even above. So people ask, why? What's the purpose of using a log chart? Why would you move from a linear chart to a log chart? How could you just be doing this magic, right? And it's not magic. We have to understand why you would use a log chart. So no, it's not a piece of wood. Bitcoin is not made on a piece of wood, right? If we look here, let me see if I can get my trusty little laser pointer. This is a linear chart, right? And this is a exponential chart on a linear scale. And this is the same exponential chart on a logarithmic scale. And you can see here, it looks linear on a logarithmic scale. Whereas on a linear scale, an exponential graph will look exponential. So the idea is that there's something in Bitcoin that makes it logarithmic. But why? Well, exponential. And that completely comes down from the halving. The halving gives it this nature. So essentially, from 2009 to 2012, 50 Bitcoins was given out. Then after this, it was 25, 12.5, and we're currently in 6.25, right? And that's the supply side. So the supply is going down like this. And then the amount of, the subsidy or the amount being supplied or mined is being given out at this rate. And this is the amount of coins in circulation. So you can see it's going up logarithmically. And if you try to graph it again, it would be terrible. You wouldn't be able to understand this on a linear chart. This is a linear chart. This and you can see the logarithmic chart. 1, 10, 100, 1,000, 10,000. Okay, so economics 101. You need to understand supply and demand, right? So you basically have some quantity of the item, and then you have a supply of it, and then there's demand for that. And for every supply, there's some demand curve that meets it. And wherever that meeting happens is the price. So we could say a certain quantity of items at a certain demand for that item will yield a certain price, right? This is just simple economics. And the Bitcoin, let's say the Bitcoin halving almost sets the supply side of the equation. And us, the people who go and try to purchase it, we do the opposite side, which is the demand side. And that kind of stems from this being logarithmic, whereas the demand is the opposite way. So we could see here that this curve looks like this. But this is a terrible way to view the information. A better way to view the information is using a logarithmic scale instead of a linear scale. And you could clearly see, if you were to take like a line and stick it straight through, you would see a nice edge. And that's to show you Bitcoin is constantly increasing. Now, to be actually honest, it's not a straight line and it's actually still curved, but we'll get into that further. So, the Bitcoin cycles. So there's basically the bull market and the bear market, right? That's the two main markets it is, right? And then, so at the start, and this is the historical cycle of Bitcoin. There's the bull market, right? And you could see here, back in 2011, it's shooting up from because this is price discovery. Bitcoin is being traded for the first time, and retail investors are trying to figure out what the price is of Bitcoin, what is the value of Bitcoin, and this goes up to about what, $10, $20. They are just trying to find the price, and this is all the way up from cents. Then it crashes. So you could call this the bull market up until midway 2011. Then there's a bear market. Then there's the process of accumulation, expansion, reaccumulation, which I would consider this part of the bear market. So from here, the accumulation part is part of the bear market, and expansion and reaccumulation is all part of the bull market. So you can see after the halving, there's another bull market here, and then after it hits the top, we have a bear market, a sell-off. This is the famous 2013 crash, all the way from 1K all the way down to about $285, right? And it goes down. And you can see Bitcoin usually crashes by 80%. So it's very common for Bitcoin to go up to our top and then crash all the way down, go up to our top and crash all the way down. And this is no different from the famous 2017 crash, where 2016 you had the accumulation period, the expansion, reaccumulation, and then there's this parabolic move up to the top of the bull market, and then you crash. This is 20,000, and I don't know if any of you guys was part of that bull market, but it's very a lot of people remember it. And then after 20,000, it goes all the way down. It even crashes all the way down here to 3,000. Could you imagine buying some Bitcoin at 3,000 US after it went up to 20,000? A lot of people lost faith. They were like, Bitcoin will never go back up to 20,000. And here we are at 55,000. So this is just to understand that the Bitcoin cycles are fairly historic. And there's no telling what the future will hold. It's possible, especially with inflation, that it could go up and never come back down. But it is a risk you have to be willing to take. So, why is this important? It's important to understand the purpose of, discussing these things. So first thing, all models are wrong, some are useful. And that is to say, it's easy to look back on models in retrospect and say, if I was to watch this graph, I would 100% be able to guarantee where it was going. But that's kind of idiotic and ideological. There's no way to actually know. There's just ways to measure and increase the probability and the chances that you might have a better bet. And that's the purpose of this video. The tools to evaluate the market sentiment. I'm going to give you to front almost like equations that generate graphs that you could use to gauge and get an idea of where the market is. You want to do retroactive reduction in risk as the market tops. So if we look back here, the market would top at these points. And the reason why you would want to sell here is because if somebody was to buy Bitcoin, there's a high likelihood that you're going to lose value on the Bitcoin you buy. So you just stop buying. And then you usually wait until the price stops going down, which is called a bottom, and that's when you rebuy. So usually you want to retroactively reduce the risk as the market tops. So what that means is you sell a portion here, you sell a portion here, you sell a portion here, and you keep selling until you hit the top. That reduces your risk, it decreases your profit margins, but at best you're out of the market at the top. Some people are willing to ride the wave because they know if they didn't sell here, they're still going to be in profit here. And if they didn't sell here, they're going to be in profit here. So it's fine. So the crashes are historic and inevitable, and we will, I think, enter another crypto, they call it crypto winter. And something interesting about Bitcoin is every single year, the Bitcoin bottom always is lower, slightly higher than the last year. And I could go through a graph of that. But basically, we entered this year at around, I think, 40,000. And then it went down to 29 and then up. So 29 right now, I think is the bottom for this year. So if we don't go lower than 29, chances are we will never go below 29 again. As in for this year. So we'll see how that plays out. So, important graph to check, and this is, if you want to check these graphs, it's on Glassnode. But what happens is, if you're not paying for Glassnode, a certain amount of this graph is not available. So if you're on Glassnode, you only get up to here, and then you have to pay to get the rest. I have a subscription to a way to get it. I pay about 20 US a month. So you guys could, if you want, you could pay for it, but I'm showing you it here for free. And basically, you could see up until, let's say, June, March, April, May, June, there was a large amount of Bitcoin on exchanges. But then coming down, look here. The percentage of Bitcoins on exchanges is so low. The last time it was this low was 2018. And usually what happens is Bitcoins drop off because people are hodling. They don't want to put their Bitcoins on exchanges. They believe it's at risk. And that's an extreme bullish case for Bitcoin, because when they are not on an exchange, they can't be traded. When they can't be traded, that means the amount of volume being traded to set the price of Bitcoin is slim. And that could be easily be bought up by retail traders and possibly new investors. So, next one. We're going to look at retail investors' price growth. So, this is the number of addresses with with less than 0.01, more than 0.01 Bitcoin. So basically it's saying if our address has more than 0.01 Bitcoin, is an actual address that planning to save and hodl Bitcoin. And you could see usually before an actual market run up, there's like a huge parabolic movement of price. Not price, of number of addresses, and it scales with the graph. So as the price is shooting up, well, this is not the price, this is the market cap. As the market cap is shooting up, look at the parabolic amount of addresses. That means more people are buying. But look at this, there's a steady amount of growth of addresses. So even though the price seems to be going parabolic, it actually hasn't gone parabolic yet. It's more succinct to here, where there's a steady growth. Oh wait, I need to put my laser pointer. It's more looking like this region. This region is more looking like this region, and we still have this amount of upside yet left. Tell me if you guys get that, because I think I kind of gloss over it, but hopefully. And retail investors are basically you and I and anybody who's not an institution. We are the normal average Joe who takes out our money to get in, and that's why it's 0.01. Whereas if it was, let's say, 1 Bitcoin or 10 Bitcoin, that's a large amount to expect retail investors to have. Okay, so we're gonna go on. So, right, retail investors. So this is called a stock to flow model, right? And I'll actually open us up and look to Bitcoin, and this one is free. So you guys could go and look into bitcoin.com and find all these charts I'm going to show you now, and this will give you a really good access to crucial charting information that could help you measure where we are in the Bitcoin market. So this was a model used to measure things like gold and platinum and stuff, and basically you could tell. So this is where we are right now in 2021. You could see this red, and this red just represents how much days until the halving. And that halving just means the supply is going to change drastically. And you could see the last time we was here was around this red region here, right? And look at where that price went. That price went from probably 3,000 here all the way up to 20,000. The last time here we were looking at, let's say, well, it was red, so probably around 100 all the way up to 1,000. So this is just an idea of how far that could go, right? The stock to flow model, 365 day and the model variance, you can see it here, right? This is the stock to flow model, and just look at every one of these corners, these edges. The edges could almost consider like a good price to buy Bitcoin, and you could still see, we could see here from the model, it says we are below the fair price, which means it's just a good time to buy Bitcoin. So if we go here to the stock to flow model, I'll read the indicator overview. This model treats Bitcoin as being comparable to commodities such as gold, silver, or platinum. These are known as store of value commodities because they are retain value over long time frames due to their relative scarcity. So gold, silver, platinum are known as scarce assets. It is difficult to signify increasing their supply, i.e. the process of searching for gold and then mining it is expensive and takes long. So that's just because practical physical assets is not easy to ascertain how the supply changes. Bitcoin is similar because it is also scarce. In fact, it is the first ever scarce digital object. That is correct. These are limited to the number of coins, blah, blah, blah. So the stock to flow ratios are used to evaluate the current stock of a commodity, the total amount currently available, so the circulating supply, against the flow of new production, the amount mined for a specific year. So what we compare in here is the amount that's circulating versus how much are going to be mined in a year. And that should give us this value here. And here you can see green versus red. And we know in the red portion here, we now barely coming out of the red portions here. So the question is, this here would be similar to here, I guess. And this here should be the run up like here. That's just one. So this is stock to flow model, and you can find it on Look Into Bitcoin. The next one we're gonna look at is the 200-week moving average. So the 200-week moving average, you can see here is a heat map because of the colors, the 4-week percentage deviation in the moving average of the 1400 Bitcoin US. So if we look here, this would be the 200 moving average and the percent monthly increase. And this chart here will show you that currently it says it's green, and you could see the last times it was green, how much it had to go up again, right? And let me show you that now in here. So in each of its major cycles, Bitcoin's price historically bottoms out at around 200-week moving average. This indicator uses a color heat map based on the percentage increase of that 200-week moving average. Depending on the month-by-month percentage increase of the 200-week moving average, a color is assigned to the price chart. So literally, you could literally code this up if you wanted by taking this graph here and putting it into, like say a calculator, calculating all this moving average data, and you should be able to get this graph, right? And the idea here is simply to show this is where it is at right now, 57,000. This is the price here. Last time, 14,000, it was red. 8,000, it was red. 5,000, it was red. To just show you how much of the run-up that's happened. So, let's look at another one. So, this is called the PUL Multiple. And this one is a nice one. So, let's go over to it, right? The PUL Multiple is the daily coin issuance in US over the 365-day moving average of the daily coin issuance, right? And there's two regions. There's a green lower bound region and the red upper bound region, right? So if you want to reiterate, this metric looks at the supply side of Bitcoin's economy. Remember when we did economics 101? This metric looks at the supply side of Bitcoin's economy. Bitcoin miners and their revenue. It explores market cycles from a mining revenue perspective. Bitcoin miners are sometimes referred to as compulsory sellers due to their need to cover fixed costs. So you guys, I don't know how much of you into mining right now, but think of it like this. If you are mining, you're operating equipment, and that equipment is burning a lot of electricity. But you can't just say, okay, well, I just gonna ignore the electricity cost and profit everything, because you have to pay the electrical bill. And when you mine on a large scale, we're talking about hundreds of thousands of dollars. So you need to sell enough Bitcoins to cover the cost of the electricity. Of mining hardware in the market where price is extremely volatile. The revenue they generate can therefore influence price over time. So it's important to understand this daily coin issuance. And you could see whenever the chart is in this red region here, that is usually when Bitcoin tops out. So you could see we're right now at 2. to, yeah. But as you go up, you can tell it's a logarithmic scale. So we have plenty to go before we hit the top. So from the time we're in this red zone, I will probably message you guys in the WhatsApp chat or probably make a video on it on YouTube. But the important thing is to know when you're in this red zone, because when you're in the red zone, it's the start of the end. So we almost in the end game. Again, hit me a thumbs up or something in the chat to let me know you guys understand and following, right? So yeah, this is the PUL multiple, and it's just a nice way of being able to estimate based on issuance where we are in the market. So next chart, this is called the 1 year huddle wave. So the 1 year huddle is equal to the unspent transactions that are more than 1 year. So if you had Bitcoin for over 1 year and you didn't spend it, that means you will be on this graph, right? And it's checking how much addresses have unspent transactions. And you can see here that it's kind of almost like a sine wave, right? And I use almost like a red squibble, but you can see right before it drops to the bottom is when you hit a high. Let me get the laser pointer out. So over here, you could see this is back in 2011. It's coming down. That means the amount of people hodling becomes less, and therefore it's a sell-off. And then people hodling for long, so you could actually measure how much hodling is going on. And then you could see, okay, it's starting to go down. You hit a top, and then when it's going back up, you see that by this green is the best time to buy. It goes up. Bottom. So this is our bottom. This is our top. This is our top. This is our bottom. A good time to buy. And right now we are approaching, historically, as you can see here, a good time to sell. So this is the 1 year huddle wave, and again I'll show you it in Look Into Bitcoin. We'll go around here and read the indicator overview. 1 year plus huddle wave builds on work initially conducted by on-chain capital. Huddle wave data groups Bitcoin by age since it was last moved from one wallet to another. So basically the time it has spent before being sent. In this example, we are looking at the percentage of all Bitcoins that have not been moved from one wallet to another for at least 1 year. This is a good example of blockchain analysis, as we are looking at the blockchain data to identify this. People always ask what's the point of the blockchain and what you could do with the blockchain. This is one of the things you could do with the blockchain. You could actually read the blockchain and find out all this data. You could find out the age. They're looking at this specific age, you see it in inverted, is useful at certain movements in the percentage of the 1 year huddle coins coincides with market cycle highs and lows. So highs, lows, highs, lows, highs, lows. And somewhere here, I think is where we're going to have the next high. So the question is how far that is, and we'll get there. So another great chart. Realize a relative unrealized profit and loss. And we'll jump straight into this one. So you can see there are different bands. There's capitulation, there's hope / fear, and that's usually when you believe that Bitcoin is at the lowest point, and then fear, people selling off because they're scared. Then there's optimism and denial, there's greed, and then there's euphoria. Euphoria is the tippity top or right before the big sell-off, right? And if we look here, we are actually, let me see, could I zoom in here? If you guys watch, this is where we are at. This is 67%, and this upper bound here is around 75%. So we are really close to the euphoria. If we look back here, look at that, 77%. This is where 20,000 happened. So you have to be looking out for these indicators, right? I hope this does give you a good idea. Let's explain what this relative unrealized profit is, right? So the relative unrealized profit / loss is the market cap, so the entire market cap of Bitcoin minus the realized cap over the market cap. So you're probably wondering, well, what does this realized cap mean? What does realized cap refer to? And let's just go through the overview. This indicator is derived from market value and realized value, which can be defined as, so you're going to define the market value. Market value, the current price of Bitcoin multiplied by the number of coins in circulation, aka the market cap. This is like market cap in traditional markets, share price multiplied by the number of shares. Simple, easy. Realized value, rather than taking the current price of Bitcoin, realized value takes the price of each Bitcoin when it was last moved, i.e. the last time it was sent from one wallet to another wallet. So if you've been hodling Bitcoin and it's never been sent from one wallet to another, it could not be considered as realized profits because it's still been sitting there. So this will not take you into consideration as realized. And this is what basically, if you're holding for a long while and then you realize it might be a nice time to sell, they could capture that information and put it on this chart, and that's how they are able to tell if Bitcoin market is in a state of euphoria. So hopefully that one is a bit easy. And again, all these charts are in look into Bitcoin, do your own research, and hopefully you'll be able to come to similar let's say market trend information or insight as me. This is not to say when to buy, when to sell. This is educational, and the sole purpose is just to give you an idea of where the market cycles are. So we have another chart here we could go through. This is called the 2-year moving average multiple. Now the purpose of this chart is simply to show you, well, let's go into the actual chart itself, right? So you can see that there's the moving average here. So 730 and then 730 by 5, right? So the green one is the 730 and the red one is the 730 by 5, right? And you can see whenever it's over this line here, it's usually in a state of oversold. And whenever it's under this green line here, it's undersold. Good time to sell, good time to buy. Good time to buy, good time to sell. Right now, if we look here, it's still not even a good time to sell. So if we look at it from a fundamental research or using this the 2-year moving average, the 730 days, you can see it's still not even a good time to sell Bitcoin, right? So this 2-year moving average multiple is intended to be used as a long-term investment tool, which I consider myself as. I don't sell day to day, I don't even sell month to month. I usually either swing, so it's like at one point I'll go back into some US, and then at one point I'll go back into Bitcoin. I'm not buying day to day. It's highlights purpose periods where buying and selling Bitcoin during those times would have produced outsized returns. To do this, it uses a moving average line, 2-year MA, and also a multiplication, which is the 2-year M5. So all you had to know is if you had sell here, which is 218, you could have buy back here 217, and this has been a really conservative person, right? But then if you had sell somewhere here, let's say 416, and you buy back somewhere here like 265, you're gonna double. If you sell somewhere here like 10,000, remember it went up to 20,000, but if you had sell at 10, which is reasonable, you could have buy back at 4, you could have buy back at 3, and then continue multiplying your investment. And as you can see, it basically touches this line a few times before it actually breaks out. And here you can tell we haven't even gone above that line. So hopefully this tool itself is good for you to understand, and whenever we break this threshold, I'll probably message it in the group and you guys will know, right? And then the last chart I want to show you guys is called the Bitcoin logarithmic growth chart, right? And this will probably let us know where we could go. So the red lines show every time Bitcoin tops out the market, and then the blue line shows the bottom. And if you realize there's a kind of sinusoidal wave to the Bitcoin mark, right? Bitcoin market. It's pretty, what I could say, it's pretty historic and trending, and you could say almost periodic. And if we look at it actually, we could see the price. The top here was 35,000, top here 1,000, top here 19,000. Well, this was 1,100, And we could tell in the future, if we just take this exact same charting data and we scale it out. Let's pan here. So if we look at here, which is July, right? So in July, the top we're looking at is 111,000, 117,000. So in my eyes, I could see Bitcoin going up to about 117,000, probably 110,000. And then after that, it is either it goes even crazier, probably up to 200,000. But I think 100,000 is a safe bet. And this is just being able to scale out the same logarithmic chart here. And you can see it tightens as it goes in further because there's less volatility. And over time, I think this will scale out to, like, let's say $1 million. So that's just my thoughts on it. So I think this is just a good understanding, and I would be looking at when this goes up to the top here, and then watch that will be the one as in the top of the sinusoidal wave, and then I want to be buying when it hits there. I will probably even be buying from here to here. Once it's under this 0.5, I'll be buying like crazy. So we are at the end of the presentation here. This is the questions time. So for the people who watching the VOD, thank you so much. Hit that subscribe, hit the like. I hope I provided a lot of value. And thank you so much for watching my videos. And we're going to keep growing this crypto community. And hopefully next time, Friday, 6 p.m., we have our next amazing stream. So hope you guys enjoy the rest of your night. Peace.